NFP week can be a very eventful time for day traders. Non-farm payroll is full of high impact news, which drives price to be extremely volatile. A lot of times, traders look at this as opportunity to flip their account, pass any type of funding challenge they might be doing, or really just make a bunch of profit in general. In reality, this is the best time to practice being cautious with your trading habits because price can be very choppy at times, or price action can be heavily manipulated before moving in its intended direction. One thing I've been able to do to help increase my success in trading NFP week is using higher time frames to be able to guide my trades. A lot of times people refer to this concept as a top-down analysis, but ICT refers to it as institutional order flow. We've all heard the term follow the money. This is essentially a concept or tool to be able to help you do just that. Using institutional order flow will help you guide your trades and will give you more confidence in your trade ideas. Being able to understand the overall direction these large institutions want to move their money will give you better clarity when price action isn't as clear, and also give you more confidence when holding your trades for longer periods. Let's break down Friday's price action and how it compares to the higher time frames. Like I said in the last video, whenever I come up with any type of trade concept, I like to ask myself 3 questions. Where did price come from? Where is it most likely going to go? And what is the current market condition? Starting here on the daily, I can see that price had broken out of a consolidation and it started moving with bearish momentum. Price was relatively around right here. Yeah, around these 2 candles. So my next thing I wanted to answer was, where was price most likely going, or what was the next draw on liquidity? These 2 lows that I have marked up were the next draw on liquidity. This gave me a better indication on where price wanted to go and what to target for the day. Moving down to the 1 hour, price is able to give me more definition to give me a better idea of what is actually going on. I am a New York session trader. I don't really trade too much in the other sessions. Sometimes I might trade in London. I may trade in Asian session from time to time, but my bread and butter is really during the New York session. My typical trading window is between 8 to about 11:30, 12 at the very latest. When I typically open my charts around 8:15, one of the first things I like to do is mark up the nearest draw on liquidity. So now that I have the daily, which is set below here in red, I want to see what other forms of liquidity are resting in the chart that price might want to be attracted towards. This vertical line right here just starts the beginning of the session that I would typically trade. So when I first opened, price was relatively around here. I had noticed that during the 8:30 news, these 2 relatively equal highs have been swept, indicating that price had taken out buy side liquidity. Understanding when price takes out liquidity, it gives a high chance of there being a reversal. I knew I could start expecting lower prices. Another area of interest for me were these 2 relative equal highs set above here. During NFP week, you can't really count out anything. If the right news is dropped, price can start moving with a lot of momentum. Understanding that, I have my 2 forms of liquidity for the day, and I understood what I wanted to look at. Let's move down to the 15-minute. Moving down to the 15-minute, another thing that I noticed was that there was a resting fair value gap over here that hasn't been touched yet. This was also an area of interest to me. Seeing multiple bullish forms of liquidity as well as untouched fair value gaps gives me more indication price might want to push up at some point during the day. The cool thing about a lot of the concepts ICT teaches is how transferable they are between all time frames. This means the same concept that you've seen work on the 1 minute can work on the 5-minute, the 15-minute, or even the daily. So being able to scale down what you see down to the lower time frames, you're going to see how everything most of the time will start to agree with each other. I didn't trade the 8:30 news this morning, but one thing I did notice was that it failed to tap into this higher fair value gap right here above. So I actually need to label this 15. After noticing price had failed to touch that fair value gap, it had also violated a short-term low. Again, short-term lows are good indications that price is looking to change directions. After price violated this short-term low right here, this gave me the indication that I need to start looking for lower prices. Let's move down to the 5-minute. Here on the 5-minute chart, I have the 9:30 opening price marked right here. One thing I noticed was that price did not give any catalyst for me to act on this market shift off rip. This is why I was saying earlier, during NFP week, you want to practice being very patient and being very mindful with your trading habits. Just because liquidity was taken and a market shift occurred does not mean you want to go ahead and hop into that trade. You want to find your catalyst that's going to support your trade idea. So for me, like I said, I like to go off of order blocks, and I also like to go off of fair value gaps. One thing I like to look for when a market shift occurs is a fair value gap left open. This is going to give me an idea of where price is most likely going to retrace to and before it continues in its given direction. That did not happen here. We had the liquidity taken above here. Price came back down and violated this short-term low, but there was no fair value gap. So this did not warrant a trade for me. As price was pushing up, all price did was just revisit this this buy side liquidity and continue moving back down. You can see how after this other short-term low was violated, a fair value gap was left open and price revisited into that area before moving back down. This would have been a good key entry to move for sell side liquidity. And you can see price would have taken out sell side liquidity right here on this candle. Now, when you see price take out liquidity with heavy momentum like this, it's a good indication that price is probably going to continue moving in that direction, which is good for us in this scenario because there's another pool of sell side liquidity directly below it. As price started retracing and going up, notice how the bodies of this candle are respecting this fair value gap. So if I were to mark this fair value gap right here on the 5-minute, notice how even though price wicks up and hits this bullish candle before the down move, so I'll mark that up for you. Price had closed with the body of the candle within this fair value gap range. Little things like that are super important. When you notice these type of key characteristics in price, it's tipping its hand to you. It's giving you key indications of what price wants to do. Notice how the bodies of these candles keep getting lower and lower and lower. Key elements that you really want to take part of. And you can see how it violated the sell side liquidity on the daily again down here. Let's break it down even more on the 1-minute. Going back to the opening price on 9:30, notice how this candle right here presents a fair value gap right here. But ask yourself, why was it not valid, right? Let's mark it up and find out. When you have price completely overshoot a fair value gap and close above it, it is violating the rules that you need for that fair value gap to be valid. Whenever price closes above a fair value gap and taps into it, that is a key indication that it is now turning into an inversion fair value gap. What that means is instead of using this as a sell catalyst, I can use this as a buy catalyst, right? So you see how this black candle, it wicked right here into the purple. Notice how it did not cross that midpoint, the midpoint of this fair value gap. Price did not surpass it. Key elements like that, price is tipping its hand again. Because we understand that there is buy side liquidity and it's also a fair value gap above, it's giving you an indication price is looking to push higher at that moment. So this would have actually been a good buy trade, and then your stop loss would have been right here at the low of this candle. So you can see the opportunity for points that you could have caught on this move right here. You could have rode this trade right back to the liquidity area, or for me, I probably would have been aiming for this. This is why you also want to be very strict with your stop loss, because if price fails, you still end the trade and profit. One key element to keep in mind, if price is truly bullish, down close candles will not be violated. What do I mean? Notice how in this run up, down close candles were not violated. Price retraced, but this candle was not violated. It did not surpass the low or the body of this candle. Notice how once it did, that's when price started changing direction. Again, these little details matter because once you start understanding price's characteristics, it's going to give you stronger confirmation to your overall bias that we had on the daily time frame. Again, higher time frames hold more weight. So when you see price moving in confluence with those ideas, you want to ride that wave, because when it agrees from the higher time frame down to the lower time frame, your trade has a higher probability of being profitable. Another thing I like to take note of is the way price consolidates in a fair value gap or in a given zone. One thing I've noticed off of my own personal studies, as price is consolidating, price often tips its hand by the way the candles are lining up. So for example, if you look at just this consolidation zone, how price is going back and forth in this given area, notice how the close of the high of these candles is getting lower and lower and lower and lower and lower and lower and lower. It's kind of like trailing, right? It's like breadcrumbing you into the direction that it wants to go. I've noticed that price does this quite a lot. So whenever you feel confused about a consolidation zone, pay attention to the direction at which either the high or the low of the candles are closing in a pattern-like form. So notice how this pattern was in a downward movement, in a bearish momentum. This is tipping its hand that price is looking for lower prices. So again, not only do we have a fair value gap we just came from off of the 5-minute, not only do we have a order block that we came off of on the 5-minute, we're also sitting in another fair value gap that we got off the 5-minute. And the way price is consolidating, it's in a downward trend. It's in a downward motion, right? This downward momentum is tipping its hand. So that's 4 confluences that we have of why we need to be looking for this sell side area to get hit. Being able to pair all these ideas together, again, it's going to give you more confidence in your trade, and it's going to give you more logic behind what you want to do. One thing that you don't want to do is be an emotional trader. Using logic to support your ideas is what's going to give you the most success. In my personal opinion, I feel like a lot of this stuff is cool to study because you really get to recognize just how simplistic a lot of this is. Our emotion is what makes it harder than it needs to be. How many times have you gone back to your chart after you've missed a trade or something and you were like, wow, it was so obvious. How did I not see it? This is why you want to be able to use as much logic as possible when you're day trading. Moving over to the afternoon side of today's trading, I had already formulated a bias earlier before 9:30 opening price that at some point price would like to return bullish and fill in either this gap or move towards the drawn liquidity on the 1 hour. So if we go back to that, this is what I'm talking about. This was the bullish drawn liquidity I was referring to earlier. And then if we go back down to the 15-minute, we can see that 15-minute fair value gap I was also referring to. So I had already had an idea where price wanted to go. So during the lunch session, you're going to see a lot of times there's a bunch of consolidation. It might be a little bit choppy because typically there isn't so much volume being pushed in that time frame. Now the closer we get towards 1, 2 p.m., especially with there being news at 3 p.m. today, I understood I was going to start seeing more volume, longer candles, more aggressive price action. Another thing I also noted was here on the 15-minute, notice how all the candles are closing. It would take out liquidity, wick up and close. Take out liquidity, wick up and close. Look at the bodies of the candle. You see how they're respecting this line. The bodies of the candle tell you everything. Imagine like you're drawing in a coloring book. What's inside those lines is the main content of what you're looking at. Now, sometimes when people color, they have a tendency to go outside the lines. But you can see the majority of what you need to focus on. It's the exact same thing when it comes to price. These wicks is just drawing outside the line, but the bodies of the candle is the main content that you want to focus on. Seeing little things like this gave me an indication, okay, price is most likely looking to push up towards something. And another key thing I realized just from having reps trading, during NFP week, specifically on Friday, price is looking to reverse a lot of the work that it did throughout the week. So we see price trending in a certain direction. Typically on that Friday, price is looking to reverse everything that it just did. So at this point, I'm kind of banking on my experience. So this is something that you can kind of learn over time. But when I picked up on that trend, I knew on Friday, if we've been selling the whole week, I need to be looking for buys, right? Because price wants to be able to retrace or clean up a lot of the liquidity areas, a lot of the untouched fair value gaps that have formed early on in the week. Going back down to the 5-minute time frame again, I see another trade idea unveiling as I'm watching my chart. If you guys have not picked up on it already, one of my main bread and butter setups is number 1, waiting for liquidity to get swept. Number 2, waiting for a market shift. And number 3, some type of catalyst that will support the trade idea of price changing direction. Here during the lunch hour, we can see that the daily buy side liquidity was taken out. Now, what did I say earlier? Higher time frames hold more weight. Understanding this, I understand that I can expect a stronger reaction, more volatile candles, more price action, more movement in these areas that I spotted on a higher time frame. Price is going to explode in these areas because of the volume of orders being pushed in these specific higher time frame areas. So looking at something like this, I understood this was a great area for price to start hawking towards this 15-minute fair value gap that was left on, I believe, Tuesday or Wednesday. Once price had aggressively pushed up past the short-term high, you guys can guess it, I saw another market shift was about to unfold. This right here was very key to me. Once I saw this gave me a key indication that price wants to keep hawking up. Another thing I also noticed too, this is something I was able to pick up just from having reps. When price starts to do this, I'm already knowing the direction that it wants to go. Cool thing is, because of this 5-minute fair value gap, I knew that if price closed above the midline of this fair value gap, that was a confirmation in my trading style that price wanted to continue going bullish. So one thing I said in my previous video, when price has a market shift and it's coming up through an old fair value gap, we could even use this one on the 5-minute, for example. I want to see price start pushing up through these fair value gaps with speed, with momentum. It's giving me stronger indication price is ready to start taking something else down. So notice how after we had this market shift, this fair value gap, this breakaway gap was left untouched, which is okay. But when price came up here and wicked down, the following candle shot right through that. This is giving me the indication if price were to return back in this area, this is a great time to pop a buy. It's the same thing that literally just happened over here. So let's go back to the 1 minute. Earlier I had said, so when price had overshot and closed above this fair value gap, price had tapped back into it, did not surpass the 50% and shot straight up towards its goal. The exact same thing literally just happened. Now I know you guys are probably looking at that and it's mind blowing. It's so cool to witness. Understanding the market from a deeper perspective gives you so much confidence when you're trading, especially when you're trading during NFP week. These little concepts, these little details can really make a huge difference in your day trading. This is why I love to study this. It's so fun to share these concepts with other people because it can really be life-changing for them. Again, all of these concepts are transferable between time frames. So notice how it happened here, right? Price sprung up here. Springs up a little bit more, comes back down. Wicks up. It closes right there just below the 50%, right? Seeing this should not scare you. Reason being is because notice how we have this bearish order block right here. See how it hit it and wicked up? Once this candle closed and this started opening up, I started popping buys. Because logically, think about it. If my goal is all the way up here and this is where I'm popping my trade, my mental stop loss is going to be underneath this order block. So if I mark this up right here, this order block that just got hit, my stop loss is going to be underneath here. because this breakaway gap should not be getting filled. Whenever price leaves a breakaway gap, you want to see it left untouched. These are giving you key indications that you're on the right side of price action. So all of these things are giving me confidence. And like I said earlier, using higher time frames, they're giving you more confidence in holding your trade. I was able to ride a price all the way up to my intended target because of utilizing institutional order flow. So here, lastly, we're moving right back to the 1 hour. We can see how this long bullish run up left a fair value gap on the 1 hour. So again, higher time frames hold more weight. Whenever you see these catalysts on the higher time frames, you need to be expecting bigger reactions from these zones, from these areas. As price was consolidating, if we go back down to the 1 minute, this is that 1 hour fair value gap I was talking about. I knew that when price came back in here, I was going to expect it to shoot back up into this fair value gap. And again, notice how price, it does not close below the midline of this fair value gap. Strong indications, another confluence on why your trade idea is correct. So as price was accumulating, notice how when it broke down, it sprung right back up. It shot right through this fair value gap right here. And look, we just said it earlier. What is it called when price shoots through a fair value gap and returns into it and continues in its given direction? An inversion fair value gap. This stuff happens over and over and over and over and over again on all time frames. Go back in your charts, review old price action, and see it for yourself. When you're able to find these things on your own, it is so empowering, and it gives you so much confidence when you're entering your chart. That fear that you have when you pop a trade, is it going to go in my direction? How long should I hold it? Do I need to get out of my trade right now? All of that stuff is going to start dwindling away slowly and slowly. And all of a sudden, you're going to start sitting back with a smile on your face because you understand where price is going to go. That, my friend, is one of the best feelings to ever have in this world. The same thing that you were looking at that used to cause fear in your heart, you now look at it with a smile. You now look at it because you understand with full confidence what is about to unfold in front of your face. That feeling of looking at something that used to cause fear in your heart, they used to cause you anxiety, make your heart start beating a little bit more. They used to make you just stare at your phone screen super hard, super intensely. That emotion, that feeling in your heart, that feeling when you can now look at something that used to cause small forms of anxiety, make your heart start beating a little faster, make your hands a little sweaty, have you staring at your phone or your screen super intensely, and you can now look at it and just sit back and with full confidence understand with high accuracy where price is reaching for. It's super empowering. And if I can help other people achieve that form of confidence in their day trading, I'll feel so accomplished through my videos. With that being said, I think I'm going to end my review. I hope you guys have a great trading week. And if you guys enjoyed the content, like the video, subscribe for more content coming soon, and share it to somebody else who you feel like could benefit from it. See y'all in the next video.